Right now, we are seeing the true colors of our economies coming through. My name is Nathan Krampe. I'm the founder and CEO of Lions Wealth Management. Now, why I say that we have the true colors coming through is because I like to think of our economy and manufacturing as a stoplight. On the one hand, we have red, and that means stopped, that we're not growing, and sometimes, depending on how you look at it, we can even be going backwards and also shrinking in our economy. Then we have the yellow light. And as we're driving, yellow means caution, it means slow down, and that's exactly the same thing that it means here as well, that we're slowing down and we may need to be coming to a stop soon, so we may be moving into the red. Now, we have green. And the words of my kids, that means go, go, full speed ahead. So, we have red, we have yellow, and we have green. Now, if we take a look at where we're at today with the world's economy, and more importantly, what this chart shows, the world's manufacturing economy, we are solidly in the yellow. Now, there are some reds across the board as well, and even though the U.S. is not in the red the way other economies are, and we're not tied to manufacturing the way other economies are, we still have a lot to learn from the world. The world still is a manufacturing economy. And what this tells me is that if we are in the yellow, meaning we're not really buying as much goods, either we have too much inventory already, or a lot of the people that are in charge of buying some of the manufactured goods are thinking that they may not need to buy as much because of the fact we may not be selling as much in the future. That then tends to lead to the consumer, you and I, and what we are purchasing and buying. And if we're not buying as much, then that can be a self-fulfilling prophecy that the economy will start to go into a recession. So that's on the one side, that we have recession indicators that are out there. Now, on the other side, we have people that are seeing this, and a lot of times these are the small traders, the small, what we call options traders, that are buying a specific type of option called a put. And this put means that as the stock market starts going down, they can make money. Now, these small traders are buying these puts, these ways to make money when the stock market goes down, at a record pace. And we have not seen this type of buying before until we go back to 2008, 2009. What this also tells me is that they do it at the absolutely wrong time most of the time. And if we take a look at the data, then this is provided by Sentiment Trader. We take a look at their data that they have put together. Most likely, if we continue the process, this shows that we still have room to run in the stock market, because that was the exact wrong time for these people to be buying these puts. So on the one hand, we do have the economy that's softening. On the other hand, we have some indicators that show there may be reason to grow in our stock market. But hear me say this, over time, our stock market always follows what the economy is doing. And if our economy is softening, over time, the stock market will soften and possibly go down. So we're still going to say, right now, we are yellow. That's the color that we're going to take away today. That we're yellow. We may get back to green at some point, depends on the Federal Reserve and their counterparts around the world. But for now, we'll just take it easy, grow when we can grow, be cautious when we need to be. Call me as you have questions, and we can definitely talk about this a little bit more. With that, take care. Enjoy the rest of the day.